Welcome to TradeTheMBI.com. This is John and our ongoing series of the Shakeout Indicator. This is part 3, and we're going to discuss what a breakout of a chart pattern should look like versus what you've probably been taught from the standardized technical analysis view. We went over this breakout of the highs here where we really showed that it was not a breakout of the highs that could be trusted and in fact led to new lows. But what I want to go over is some of the entry points that you would find with the shakeout indicator. And typically when we're looking at a decline in the histogram, we're looking for our first move up, ideally the first move up inside of the yellow line that's sliding down with it, and you would get a buy signal. Now, of course, in this case, we had a buy signal from the MBI right there. And in this case, we have a negative 61 reading on the extreme histogram, which means that this low is going to have to be retested down the road. And so that's something we keep in mind. But as we move along with this trend, it's moving for a couple of days, and then boom, it makes a higher close, but dip lower on the shakeout indicator. And at that particular point, we're also nearing a trend line move right at the resistance. And so we would expect that price is going to decay, but oh no, it actually went higher. But oftentimes you'll get that little hump in the reading, and it just takes a day or two for the eventual move to take place. And in this case, there you have it. It starts to decay, but bounces right back into it. And it gives you a second buy indication, just a fraction below where it got out but avoided some of the shake-up indications. But now we begin to get a secondary pivot, and what we have here is this trend line moving along the resistance line, and then this overall downtrend which we established well before price even broke down. And as we move across, these lines begin to converge, and oh no, we get another sell signal right in between this point. Price then decays a little bit further, but then there it is. Shakeout indicator moves higher. We get a major buy signal because now we're in a convergence point. We have the support, the resistance, and the overall downtrend line meeting at one particular point. And we get a buy signal right here at about 1450, where a lot of people would not be thinking that this is about to explode. But at this particular point, if you get any increase in the shakeout indicator from here, you're looking at a very powerful move. And we come across, and it doesn't seem like anything special, but there the momentum builds, and when we get the shakeout moving towards the zero line, it means you have a massive influx of large buyers, and you would expect a pretty good sized breakout to take place from this particular point. And there it is. As we move to the positive, the trend changes to the green, and you get an explosion. And sure enough, shakeout gets near the warning line, which is the yellow right here, but we never really, after a huge move up, want to trade off of that first one. We look for a second rise in it, and it's usually that dip that you want to take advantage of as a secondary opportunity to potentially buy another breakout move. And in this particular case, that works out well. And what we do is we begin to look at the next moment that it dips down above the warning line, because that begins to be where we start to think, okay, now we have to look to be protective of the move, and we get a final little tilt up in our indicator as we're going along. But then we reach the magenta line up here, which is a clear sell signal, because now you've reached an extreme where they're pretty much starting to pump price, and this is where we would look for them to start to unload as price moves along. And what we had here was a reading that was 24.91, and then we dipped down to 24.60, even though they look fairly similar. That line is declining, so you put the little sell signal right there, and it's right at about the 1500 point. So from that original entry down at 1450, you made a little over 100 points in this particular move that seemed rather innocuous, but the shakeout really could see what was happening behind the scenes. And likewise, it's saying that the market should be heading lower. And then you get a second signal after it pops up above it. And now it's clear because you've got this little trend line that's drawing up, and you've just closed below it. And what happens? Well, you get a signal that says, wow, it should be going back up. But no, it declines just as was indicated. And now you've broken the uptrend line right here that was established even before the little breakout right here, because now we've dipped below it. So now you are clearly in a defined downtrend, and you broke below the red line here, so you would expect those lows have to be retraced. but you get a little upswing. But here's the problem with this upswing. You're moving along, your trend's indicating positive move, but look at how much lower that shakeout is at relatively similar price. This is your second opportunity to go short, and short in a big way, because that shakeout indicator is extraordinarily low compared to the same price level. And what we've seen here now is they floated price a little bit, and the big players have really sold into it in a big way. And you can look for that to really carry some downward momentum moving across. And you can see that pretty much that downtrend, and you moved all the way back below that 1450 line, which we knew we had to retrace anyway. So hopefully this gives you an idea of how clear, both in trend as well as in short burst moves, you can trade the shakeout indicator. Even though we knew overall trend was going to be heading back to the downside, it still gave buy opportunities on the increases. You just had to be careful, knowing that they were likely to fail, and therefore you would have just kept your stops tighter. So as always, I hope this gives you a better insight as to the shakeout indicator and how powerful it can be in trading along with the extreme histogram.